Hello, dear traders, and welcome to Olymp Trade. My name is Angie. I am a financial analyst with Olymp Trade, and during this webinar, we are going to speak about the three most common mistakes that traders make. This is an interesting stream because trading is a life journey throughout which we learn and we gain more and more experience. And sometimes we learn from our mistakes, but wouldn't it be better if we were aware of other people's mistakes so that we could avoid them and learn from them? This stream is going to be very beneficial for beginner traders who will learn something new, and likewise for experienced traders because we all need a reminder from time to time to refresh our memories and renew our strength in trading. First, let's go ahead and, as always, check the sound and the picture. Please let me know in chat if you can hear me and if everything is okay with the picture. Please let me know what country you are joining me from today. You can also let me know if you are if you are a beginner trader by typing new in chat, or you can simply put a plus sign. While I am waiting for your replies in chat, I do want to remind you to please make sure that you are subscribed to our YouTube channel. Give this video a thumbs up and ring the bell so that you don't miss out on our notifications. I also want to remind you, my friends, that you are always welcome to leave your comments below this video, where you can ask your questions and you can share your comments and thoughts because we always love to hear from you. Okay, I do see our people in chat. We have Ayush Kumar is from India. Yusuf is from Egypt. Rahul plus sign, thank you so much. Simuku, welcome from Namibia. Rajesh from India. Angie, hello, hello. Dixon, thank you so much for confirmation. Satish, Manip Singh is from India. Bhupendra is new. Well, I welcome you and I hope that you will get something, you will learn something new during our stream today. Dani is from Indonesia. I welcome all of you. Thank you so much for the confirmation in chat. Alrighty, so let's go ahead and start with our topic. The first thing that we will start with today is the first mistake that I would like to mention, which is the multiplier on Forex and your time frame and trade duration on FTT. Okay, let's go ahead and switch to our platform. Close our notifications so that they don't, so that we can see more clearly. So let's start with the multiplier. We actually had a stream recently that was dedicated to the multiplier and how to use it properly when you are trading. If you would like to see the full video, I'm going to go ahead and send it in chat right now. So that's our full stream on the multiplier. You see, there are several multipliers available on Forex on the Olymp Trade platform. We have starting with the one multiplier when we are trading different stocks. They are closed right now, but when you're trading stocks, the multiplier is ×1. And when we're trading different currency pairs, the multiplier varies from 50 to 500. The main thing that you have to remember is that a higher multiplier is going to potentially bring you a higher profit, but likewise works against you if the trade starts to move in the opposite direction of your trade. I do have a few very quick examples on the demo account. This is just an example I want to show you just briefly. I have two trades open, one for they're both for $100. This is using the 50 multiplier. As you can see, if I want to make $200, I have to wait for the price to travel all the way down here. And likewise, my stop loss, if I lose my $100, it's going to be all the way up here. Okay, this is, oh, excuse me, forgive me, that was my incorrect. This is using the high multiplier. This is using the 500 multiplier, as you can see right here. And this means that I will gain $200 when the price reaches this level. But likewise, I will lose my $100 if the price reaches right here. And this is if I use the 50 multiplier, the lowest multiplier. As you can see, I will gain my one. Excuse me, just 2 seconds here. So I would have to wait for a much longer time for the price to travel to gain the $200. But likewise, I have all this space right here if in order not to lose my $100. So basically, as you can see on this example, this is the 500 multiplier and this is the 50 multiplier. The thing that I would like to express right here is that you have to keep in mind that the market moves in waves and it has moments of unpredictable volatility. So you should definitely use a higher multiplier with caution and only use the higher multiplier if you have a really good and strong signal. Generally speaking, especially if you are a new trader, I would suggest that I would recommend that you use the times 100 multiplier or maximum times the 200 multiplier because when you're trading, because this way you are able to generate a good profit while maintaining control of your trade. So definitely, if you're new, if you're a beginner trader, try not to use the 500 multiplier because as you can see, you can gain a lot of profit in a very short period of time. But likewise, if the trade starts to move against you, you can lose. You can potentially lose the entire amount of your trade very quickly. Another thing that I would like to mention is that when you are trading and you switch between different assets, the multiplier may change. It may adjust automatically. So you do want to you don't want to rush. You want to take your time when you're opening your trades, and you want to check all the trade parameters before you enter a trade. So once again, if you want a more detailed explanation on the multiplier, check out the link that I sent in chat, which I will also attach in the comments below this video after the stream. So just to sum it up, do try to use the medium multiplier when you're trading. For example, on gold, I think 50 is ideal for trading. You can use a lower multiplier if you want to minimize your losses or if you're unsure about your trade. But do try not to use the highest multiplier times 500 because that is risky. So this is about choosing the appropriate multiplier when we are trading. Now, if we switch right here to fixed time trading, what I would like to mention is that when we're trading FTT, that's fixed time trading, the thing that I would like to mention here is that firstly, for those of you who are new or just starting with Olymp trade on FTT, what we have to do is we have to select a trade duration. Which is also called the expiration time, and this is basically in how long the trade is going to close. The way that we choose the trade duration is that what we do is we look at the time frame. This right here, down here, this is our time frame. So we'll look at our time frame and we multiply the time frame by times 2 or times 3. So basically, if I'm looking at the 10-minute time frame, my trade duration should be 20 minutes or 30 minutes, so times 2 or times 3. The thing about FTT is that we can make a big profit, on average about 82%, in a very short period of time, which is why a lot of traders like to trade on the 1-minute and on the 5-minute time frame. The thing that we have to understand and that we have to remember is that when we're looking at such short time frames, we see a lot of market noise. Market noise means that the price moves are very unpredictable. And therefore, my suggestion, if you choose to trade on lower time frames, especially if you are a new trader, you want to start trading with at least the 10-minute, the 15-minute, or even the 30-minute time frame. So once again, as far as the trade duration, I would take the time frame and we'll multiply it by times 2 or times 3. So if I'm looking at a 30-minute time frame, your trade duration should be 1 hour, so 60 minutes, or an hour and a half. To get using these slightly higher time frames, you have a chance of getting a better signal. So just a second here. Let me just check in chat. So basically, this is our first mistake. So don't try not to choose a high multiplier when you trade, and do try not to trade on very low time frames like the 1 minute time frame and the 5 minute time frame. Okay, this brings us to our next mistakes that I would like to discuss with you. And this is risk and money management. And once again, if you would like to check out a full video on money management, I'm going to go ahead and send it in chat to you right now. This is a very important topic that I will briefly touch up on today. But if you want to get the full video, definitely check it out. So the first thing that I would think every new trader asks themselves is, how much do I start trading with? How much do I open my trades with? Like, is it the entire amount of my deposit? Is it maybe half of the amount of my deposit? So it's important to understand that if you are a beginner trader, then your trades should not exceed 2% of your account balance. This means that if you deposit $100 to your account, then your trades should be no more than $2 each. And but then again, once you gain more and more experience, you can gradually increase your trade amount of up to 6% of your account balance. But when you start, do try to trade with your trade should not exceed 2% of your account balance or of your deposit. So another thing that you want to consider is that don't try to get rich quickly by trading with large amounts. So in other words, don't be a shark. And likewise, you don't want to enter too many trades, which means you don't want to be a pariah and you don't want to overtrade. The shark and pariah concept is a characterization by Alexander Elder, who was a famous trader, who also said that if while you are trading, if you lose more than 6% of your account balance, you need to take a break. So literally turn off your computer, clear your mind, take a walk, relax, and then come back to review your strategy, review your trades, see what went wrong before you get back to trading. And well, actually, we'll talk about emotions when we discuss our third mistake. So once again, don't forget that you need to choose your trade amount wisely. You don't want to overtrade by opening many trades. So like a pariah, opening too many trades, and you don't want to open trades with large amounts like a shark. You don't want to bite big pieces. You don't want to be a shark and bite big pieces out of the market. Okay. Now the another important thing when considering money and risk managing is using stop loss and take profit order on Forex, for example. And here I have a trade open on gold for $100. And as you can see right here, you see the when you set a stop loss, we set our stop loss so that we minimize our losses. And as you can see, I set my stop loss right here, which is minus 50. So if the trade starts to move against me and it breaks this level of support, I will lose only $50, not my entire $100, not the entire $100 of my trade. And likewise, we use the take profit order so that we don't miss out on profitable opportunities to close the trade. I'm going to be sending you many useful links in chat. We also have recently had a stream on different trading orders. If you would like, you can check it out right here. So basically, you don't want to, you definitely want to use these tools that are available on the platform for one, stop loss to minimize your losses, and two, take profit, not to miss out on profitable opportunities to close the trade. Now, this actually brings me to our last mistake that I would like to discuss with you today. This mistake is actually in two parts. Give me just 1 second here. So, this third mistake that I would like to discuss with you is kind of in two parts. It's emotional attachment and psychological preparations. Let's start with emotional attachment. So, what exactly does this mean? Here, I would like to bring two things to your attention, which is two ways that we can be emotionally attached to our trade. Go ahead and switch this to the 4-hour time frame for a better view. So, the first emotional attachment is where we get overconfident. Let's say that there is a trend on the market. Okay, so the price is following a trend line up. And we enter a trade in the direction of our trend. But then the price breaks this trend line and starts to move in the opposite direction. And we think to ourselves, well, I already opened an up trade and in direction of our previous trend, and for one or another reason we tell ourselves that we believe that the price is going to continue in the previous trend. So even though it broke this trend line, we think that it's definitely going to, since we already opened the trade up here, we think that it's going to come back and it's going to continue up. And for another example, so this is a trend example. So we have it, or for example, if we're trading this channel right here, this flat, and the price breaks out to the downside, and we think of ourselves, I'm going to take this opportunity. I already opened an up trade, so I'm going to open even lower right here, believing that the price is going to rise. So during a time like this, some traders make a mistake by opening yet another trade in the direction of the previous trend. And the traders tell themselves, but the price is even more beneficial now, so I can open another trade in the same direction as the previous trade and make even more profit. You see, this mistake is critical and it's crucial because what the trader is doing is multiplying their losses. And therefore, it's important to be alert and to think clearly. You don't want to trade against the market and you don't want to be overconfident. Sometimes it's much better to be safe than sorry. Another example that I would like to discuss with you, another scenario, is when we get attached to a trade. And even when the market starts to move against us, we don't accept it and we don't set a stop loss and we don't close the trade as it goes more and more into the minus, thinking that the market will reverse in our favor. Here, actually, I have a perfect example of myself. I open an up trade right here on gold. I'm believing that the price of gold will increase. There was a lot of going back and forth. I had the trade open for 10 days. Sometimes the trade was close to zero. In the beginning, I was actually in a slight profit, but I wanted more, and clearly stating I was a bit greedy. Now I definitely see that I should have closed the trade much earlier. And as you can see, the gold market had a mind of its own, and on November the 23rd, the price dropped significantly, and as a result, I lost my entire $100. So the lesson here is that the market is volatile, the market is unpredictable, and to some measures, so you don't want to get attached to your trade, and you want to try to minimize your losses. And it would have been much better to close my trade with much smaller losses than the entire amount of the trade. So once again, you don't want to get attached to a trade, and if it's moving against you, you should close it, even if it's with some losses. At least you're not going to lose your entire trade amount. And also, if the trade starts to move against you, You don't want to be overconfident because the market has a mind of its own. So you don't want to enter more positions. You don't want to trade against the market because, in essence, you can possibly be multiplying your losses. And the second part of this is I want to briefly speak to you about is called the psychological preparation. The thing is that when we are trading, it is very important to have a clear and calm mind. You don't want to trade if you are in a bad mood or if you are angry. You want to stop trading if you feel that you are getting agitated. This is important because when we are not calm, it is very easy to make mistakes. When we get angry or agitated, we may enter trades that we will later regret. For example, if we're not calm and we experience a loss, we may get so upset that we enter the next trade with a much higher amount, trying to make our money back and experience even more losses. And during times like this, we aren't really trading to trade as our profession. What we're doing is trying to make our money back. And this is not correct, this isn't right, and this is a mistake. So once again, you have to be psychologically prepared and stable when we are trading. The good thing is that we can take certain steps to prepare ourselves. Let's see here. What I would like to show you now. Give me just 1 second. I'm going to share a few things with you. This is basically just our. This is the homepage of our YouTube channel. Right now in chat, I'm going to share a few links with you to different streams on different topics. For example, we have a fantabulous stream that's called How Successful People Start the Day, 15 Principles of Morning Programming. There's also a stream that's called Why Traders Need to Have a Flexible Mind and How to Achieve This, 11 exercises. And lastly, I want to share with you 15 psychological exercises to get out of your comfort zone. Just a second here. So I've shared the links with you in chat, but I also want to show you, basically, if you come to our homepage, here you can look at the different videos that we have on our YouTube channel. And also here is one of these tabs called the playlist. If you click on playlist, you can go to masterclasses and you can see a whole array of different useful videos. Another thing that's on the same topic about psychology and how to prepare yourself for trading is this one right here, the trading tilt when you're feeling like Godzilla, my friends. Very interesting topics. And what's really cool about this is that about these streams is that it's not only about trading, it's more about your lifestyle, and these exercises and advice will help you not only in trading, but also in your daily life routine. So by watching these webinars, you learn how to prepare yourself for trading using different exercises. For example, of course, it's important to get a good night's rest. It's important to have a good meal. Definitely have snacks when you are trading to feed your brain. It's also important to, for example, air out your trading space so that your brain is functioning properly. But these are just a few suggestions. So I definitely highly advise you to check out the streams because there is a lot more that you can do, that you can practice to increase your trading efficiency. Now, my friends, I do have a few a few announcements for you. Firstly, I want to mention that you don't want to forget that you have until the end of this month to use the special bonus on statuses. If you upgrade your status to the advanced or the expert status, and here you can check out all the different advantages that each status provides. If you upgrade your status to the advanced or expert level before November the 30th, so you still have a few days, you will be able to enjoy the upgraded status for 90 days instead of 30. So it's like you definitely don't want to miss out on this opportunity. Another announcement is that now we are going to be releasing our weekly roadmaps, which is our weekly trading outlooks and summaries of the previous week on Sundays. So it's important that you are, just a second here, it's important that you are subscribed, and you definitely want to don't forget to ring the bell so that you don't miss our notifications during the weekend. During the weekend, we tend to rest and we sometimes forget about the market. But with this new release on Sundays, you are definitely going to be well prepared for the upcoming trading week before it starts. So you don't want to miss it. And of course, don't forget to give this video a like. Tomorrow, we are going to have an awesome and interesting stream. Yaroslav and I will have a live studio where we are going to answer all of your questions. The stream is going to be at 10 a.m. GMT, and you can join us and you can ask us anything and everything about trading. Anything about the platform and so forth. I just sent you the link in chat. By following the link, you can set yourself a reminder. So, and of course, we'll see you tomorrow about that. And lastly, I'll share a little secret with you, my friends. During the next month, the month of December, all of our streams are going to be dedicated to live trading using different trading strategies. And I know how much you guys like to trade, so it's definitely going to be really exciting. So we're going to be live trading with you during every stream using different trading strategies. Alrighty, nice videos. Is it bad? Divyansh Verum is asking, is it bad for traders to trade on Mondays and Fridays? I don't see why. You do want to take note that on Mondays when the markets open, there may be more volatility, so you want to be aware of that. But I don't see any reason why it's bad to trade on Mondays and Fridays. Okay, let's see, was there any other questions? Bakare Moshor, I'm always losing. Should help. Someone should help me out, please. I highly advise you to come to our trading streams and also check out the playlists and the videos that we have on our YouTube channel, because this is what we're here for. This is what we do. We teach you how to trade and we explain everything, how everything works, so that you can trade properly. Also, if you're experiencing some losses, try to practice and trade on the demo account, and when you feel more confident, then proceed to the live account. Alrighty, my friends, I do see that everything's okay with in chat. I want you guys to save your questions for tomorrow, because tomorrow during the entire stream we are going to answer all of your questions. So go ahead and write down everything that interests you. Write down all of your questions, anything and everything that you want to know. I want to mention that you want to write them down so that you don't forget. And tomorrow we are going to answer all of your questions. I thank you so much for tuning in, my friends. I hope that you learned something new. I hope that you enjoyed this stream and you got some useful information that will help you in trading. And I hope to see all of you tomorrow. Thanks so much. Bye-bye.